Strategies for mitigating interest rate risk. Interest rate risk is a real concern for investors and financial institutions. Sudden changes in interest rates can have a significant impact on the value of investments and can lead to potential losses. In this video, we will discuss some strategies for mitigating interest rate risk. Diversification. Diversification is a key strategy for managing interest rate risk. By spreading investments across different asset classes and maturities, investors can reduce their exposure to interest rate fluctuations. For example, holding a mix of fixed rate and floating rate investments can help offset losses in one when interest rates change. Use of derivatives. Derivatives such as interest rate swaps, futures, and options can be used to hedge against interest rate risk. These financial instruments allow investors to lock in interest rates or protect against adverse interest rate movements. By using derivatives, investors can effectively manage their exposure to interest rate risk. Adjusting portfolio duration. Duration is a measure of the sensitivity of a bond's price to changes in interest rates. By adjusting the duration of a portfolio, investors can reduce their exposure to interest rate risk. For example, if interest rates are expected to rise, investors can shorten the duration of their portfolio to minimize potential losses. Monitor economic indicators. Monitoring economic indicators, such as inflation rates, GDP growth, and central bank policies, can help investors anticipate changes in interest rates. By staying informed about economic developments, investors can make informed decisions about managing their interest rate risk. Stress testing. Conducting stress tests on investment portfolios can help investors assess the potential impact of different interest rate scenarios. By simulating various interest rate movements, investors can identify vulnerabilities in their portfolios and take proactive measures to mitigate risk. Active portfolio management. Active portfolio management involves continuously monitoring and adjusting investment holdings in response to changing market conditions. By actively managing their portfolios, investors can take advantage of opportunities to reduce interest rate risk and optimize returns. Interest rate risk is a complex challenge facing investors, but by leveraging these strategies, investors can effectively manage and mitigate their exposure to interest rate fluctuations. Want to learn more? Claire Trifle on LinkedIn.